All right, good evening, everyone. It's me, Kelvin from Round and Search, and today we'll be going through looking at some of the price action that traditional technical analysis don't cover. All right, so before we start, remember to give us a like and subscribe to our YouTube channel and our Facebook page for future any live stream coming up. And of course, we do have a lot of series day trading in US market, in Malaysia market, and also some of the Sunday market prep to allow you to understand and know what kind of trading method to use in the coming weeks. Okay, so let us look into the what we are looking at right now. So basically, why I come up with this is because recently there are a lot of stocks are starting to go for some rebound, and then we see that in the market, and then of course a lot of people in the market, they will feel excited, right? So when they feel excited, there's a lot of chances that you will get there's a lot of chances that you will get over excited and then forgot about losing that you have done last time. So that's why it is important for me to be here to remind you guys that this is actually, you need to be careful of it. All right, so sorry about the screen that keep on moving around. So I'm just adjusting this thing over here so you guys can actually have a better look at it. Okay, so let's look into it. So of course, in the market right now, there's a one very what should I say? Wait, let me do this setting here. Okay. So let me see. There are more people are coming in, right? So of course, do give us a like if, let's say, you find that this is helpful to you and you want to share it to your friend as well, because this is something that you will never find out in technical analysis. For example, let me share with you guys. Right now, you can see majority of the stocks are actually going down. So I have shared this out in my blogs or maybe in the public channel or public live stream, saying that be careful in the market. Last week, I starting to share this out last week, or maybe during the market prep, Sunday market prep. I share this out to everyone. Be careful, don't get too excited. Of course, I know that everyone in the market, they feel very excited because there's a rebound. They start to see their portfolio turn into green and then making some profit right now instead of losing money in the market. So I share this out is to make sure every one of you are able to remind yourself the time that why we lose money, because traders tends to forget like why they forget the losses that they have made previously. And then when they start to make profit, and then they start to become excited. Then when they start to become excited, then they get overconfident. This is normal. I know why this happened is because most of us, we have this intention of not intention, it's more like we do not know how to look into the market, knowing when the price is going to have a retrace, don't know whether the price is going to continue move up higher so that we can react to it. So all this thing is a must for us to know, but the education or maybe the sources on the technical analysis that we have in the market right now is not able to help us with that. For example, how do we decide to sell or hold the stocks? So this is one of the very important questions that you need to ask whenever you enter into a trade. For example, how traditional technical analysis decide to hold for during the price in the uptrend. Like for example, you enter into the stocks based on a rebound in the past few days, and then after you enter, so when right now the price start to goes down lower, so of course after you enter, you set the profit target. So when you have the profit target over there, then you wait for the price to hit your profit target, then only you exit. Or you can look into the previous resistance to find that whether this resistance is going to is one of strong resistance, and then for you to exit first. But one thing is that how do you know that it's going to be, the price is going to stop at the resistance point? So that is one of the question as well. So that's why most of us, we decide that using our guts feeling. So we think that it might actually be a strong resistance, so we sell it first. But if let's say you do not know So, or maybe previously you enter is based on resistance breakout. So right now there's another resistance over here. So you find that, it's very contradicting with your entry decision, because previously resistance breakouts and right now it hit the closest resistance, so you need to sell. So then what for we put the profit target, right? So this is the traditional technical analysis that they if you are using that, this is how you exit stocks whenever you enter into a stocks and then it's moving up higher. But the problem here is that we don't have an analysis that tells us that if the price is moving up higher and then when it starts to go down lower, like for example right now in the market, so what should we do? Should we take profit first, or should we wait until the price pull down, or keep on telling ourselves it's just a small retrace? Just like this example over here that I'm going to show you. So this is based on the chart pattern breakout. If let's say you have learned technical analysis, is one of the triangle breakup, so it's very commonly used. So what you do is that you spot this and then you wait for it, and then you see that the price actually have a breakout over here, so start to break out with high volume, so it's an entry rules. So when it's an entry rule, so what you're going to do is that you enter on the day when you break out, so you measure the profit target using the white, how high is the triangle it is, and then you plot that at the resistance, right? That is the traditional technical analysis. Then after that, you put on your cut loss point. So you put the cut loss point here. But here's the questions. If let's say the price goes like this, it moves up higher, but it starts to have a withdrawal or goes down lower, or even if let's say you don't enter based on the resistance breakout, you enter based on the pullback over here, and then you enter again at the after the pullback, the rebound. So after you enter, when it starts to go down here, what should we do? The profit target is still far away from us. Should we hold or should we sell? So if we sell, we are able to take the profit here. If we don't sell, the price might actually go down and hit our cut loss point, right? So there's two decisions over here for you to make. But both of these decisions, you are still guessing. You do not know what is going to happen. You enter or you exit these stocks, you take this profit, or you continue to hold these stocks up until your cut loss is based on your guessing. Because technical analysis itself is just tell you like, enter here based on the resistance and then wait for it to hit the profit target, or wait for it to hit the cut loss point. So it doesn't tell us like what happens if let's say it doesn't hit the profit target and start to turn south. So that is what I encountered last time also. That's why I look into this transaction data. I know that in the market, we know all these big boys are working, doing their operation to push the price up higher. So when you understand this, the big boys are doing all this operation, mark up the price, distribution, and then throw the price down lower. So if you understand that, you will find that, if let's say you buy based on resistance breakout, it doesn't make sense. Why? Because if you look into traditional technical analysis, the resistance breakout is where selling pressure comes in, right? But they never say who are the selling pressure, right? So, but we know in the current market, or not just current market, overall in the whole financial market, is the big boys world. So the big boys are selling that. So why is the big boys selling? So when the big boys are selling, it means that they are distributing, taking the profit, because the big boys, they can't sell their shares at the top. So what they do is that they sell on the way up, or selling something like this. They sell on the sideways over here, and then after that, they're just going to push the price up as high as possible to attract more buyers because they have lesser shares. The majority of the shares have already distributed at the sideways here. Of course, this stock before that actually going up from about like 10 cents or 20 cents. So right now it's 80 cents. So they have made a lot of profit from here. So if they are selling, means that they are going out. So when they are going out, so is this resistance when it break? Does it make sense? What I mean over here is that they are the person that moved the price, and they are the person that is selling right now. And you are looking at it, it break this resistance that where they are selling, which they want to push the price up higher to attract more buyers to come in, and you move in. Does it sound right? It doesn't sound right. And if let's say you put this resistance turn into a support, it doesn't sound right as well, because the big boys are selling at the resistance previously. So right now the price, you turn that into a support, it doesn't make sense because they are selling at this point. So this is why technical analysis, whatever that you are looking at it, you'll find that Why is it always guessing? Why do I enter into a stock's resistance breakout and then I wait for it to hit the profit target? If it doesn't hit my cut loss, why can't I take the profit in the middle if I know that stock is going to pull down? Like for example, right now the price, majority of the stocks, the price are actually pulling downwards. If let's say they are pulling downwards, then if we get out right now, we're going to lose money in the market, or we have lesser profit in the market. So if you're looking into this, it's just down to you're just feeling your guts. You're just betting on it, whether you take the profit right now or whether you aim to hold and then to let the price move up higher. So this is the questions that I always ask. Take profit now or wait for cut loss? Should I be disciplined on it? Because the plan doesn't tell me, technical analysis, the plan, the traditional one, doesn't tell me that halfway, what should I do? Is there any plan B for this? Is there any plan C for this? Okay, plan B is always the cut loss. Is there any plan C, D, E, F, G? So it doesn't have. And how do I know that the price retrace is really just a small retrace and it will actually bounce back up higher the next couple of days, or is reversal in that? So it doesn't tell us that. So in this case, if let's say you choose to wait for the cut loss, if you hit your cut loss, then only you exit, because you find it right now you still have some profit over there, so you don't mind to what is happening? I'm not sure what is happening in the Facebook side. So you don't mind to hold on to it. So if you hold on to these stocks, then the price hit your profit target, as it hit your cut loss, you cut the losses, and then right now the price move back up higher again. So this is the common questions, the common things that a lot of people, a lot of traders are facing right now. So some of you might say like, okay, so you should actually wait for it, okay, to hit the cut loss and then enter it again. So the question here is always like, when should I follow the cut loss? Or when should I not follow the cut loss? Or when should I take the profit here right now? And when should I don't do the cut loss, continue hold on to the stocks? So this is the very important questions for all the traders you need to ask yourself. Because if you do not know about this, you do not know how to answer this, you don't have any answer for this, then your trading returns, your result will be the same every time. Make profit during the bull market, lose money during the bear market. Make profit during the bull market again and then lose money during the bear market. And why you are able to make profit in the bull market is simple. It's easy to make money in the bull market. All right. And of course, if you look into a majority of this technical analysis, that the chart patterns that you're using is working when the market is in the uptrend. It's only working in the uptrend, but when it starts to turn into the downtrend, or before it turns into the downtrend or at the peak, does it tell you that that price is going to peak at this point? It doesn't tell you at the high side, but it tells you at the lower side. So you will lose out a lot of profit during the time. So what I'm sharing with you here is I'm not trying to tell you we should look into fundamental or value investing. Okay, I'm still doing day trading, I'm still doing short-term trading, I'm still doing swing trade. Just that the things, the information that I look into it, the data that I analyze is not just this kind of systematic way of chart pattern breakout and all this thing. I'm looking into much more details of how this price and volume are transacted. And don't get me wrong, I'm not looking into some of the price and volume indicators, which they use the mean, or you can call it the average price of the volume, and for a couple of days, and then they come out with a calculation, because it doesn't work. Average, moving average, that one is the average price of the previous day. So that one is basically a line chart. It doesn't tell us anything, because that doesn't tell us what is the big boys currently thinking. What is their next price move? Are they going to throw the price down lower? Are they going to have the price rebound? It doesn't tell us that, because you just need to wait for it to cross, because the price also average out and doesn't give you the clue what is the intention. So that's why, in order for us to find out this, how do we know, and to become a much more better trader, to achieve a better result in your trading, we need to know when that we need to take profit early and then wait for it. When it break out again, then you enter again, and then you can see the amount of profits that you can actually make is so much more. So you take the profit here at one time, and then you take the profit here at one time, so basically 2 times profit. If let's say you follow a cut loss point, hit the cut loss, all right, you hit the cut loss and then you enter again, you find that the price moving out higher, so your cut loss have to minus your profit, so you have lesser profit there. So this is the reason why a lot of traders in the market, even though you learn about technical analysis from whatever courses that you learn from or from the internet, you are still achieving the same result, because the big boys do not just move according to the technical analysis textbook that you know how, because if let's say they move the same way, then they are not able to make profit. So very simple, we are only going to look into 2 things. That is a very simple method which we can solve your problem over here. We can give you the answer basically. How do we know that is going to have a retrace? How do we know that the price is going to continue to move up higher? So one of the simple way to look into it, which is an introduction that I always share to my students in my course, is using the day chart and also intraday 5-minute charts. So we are not going to look at any indicators over here. We are not going to look into any chart patterns over here. We are not going to plot any resistance or support line. But by using this and understand how the price and volume works, the big boys price and volume transaction is so you will know where is the support and where is the resistance without drawing a resistance line. Okay, so let's look into it. Let's say, for example, in this stocks over here, this stock here, let me scroll in. Okay, so you can see this is a short-term trade that we did a couple of days before, 2 days ahead. So we entered at 11, we sold at 11:17 minutes, okay, 400, and then we are able to sell at 785. So our entry is somewhere around at this point over here, 775 if I'm not mistaken. So how do we know that after our exit at this point, the price will start to go down lower? Why we choose to exit at 785 here, which is very close to the high side? So this is because we look into the transaction data of the 5-minute charts. So what we see from here is that 1st of August is the day that we do our exit, our take profit. So the day before this one is, you can see left side over here is actually on 31st of July, and then right side over here is 1st of August. So we see that the price is moving up higher. We know that this stock is going to have a rebound. So when the price is going, but the price still goes down. But when it goes down, we still continue to hold on to it. Why? Because we know that they still have the intention to move up higher, even though there are some selling pressure coming in, which means the big boys are selling these stocks. So when it goes down at this point, at the end of the day, we see some high volume actually comes in, try to support the price. So we know that, okay, this stock tomorrow, it will continue to move up higher, but it will not be much because we see selling pressure coming in. So we need to prepare for the exit. So on 1st of August, what we find over here is that there's a lot of high volume during the day, but price is not able to push it up higher. So common sense that we know if there's volume come in, then they have the intention to push the price up higher, then the price will move up. But with high volume comes in, the price don't move up higher, that means that they have no intention to move up higher, because the volume inside it consists of selling pressure as well. Or either they are doing some kind of showing you buying interest, very heavy buying interest. Every few seconds there's one huge buy volume come in, buy, but the price don't go anywhere. So that is to actually to show you that the impression of, wow, there's a lot of buyers coming in. All right, then the second time, you can see all this time over here, second time, the yellow box over here, the same thing. High volume comes in, but price don't go anywhere. They don't push it up higher. So we know that they have no intention to push up higher. All right, so that's why we know this is the point that we need to exit. So we exit, so the next day the price actually goes down low, and this is how we can maximize our profit from here, by knowing the intention of the big boss. So it's very, you can see from here itself is very different. We are not going to plot any lines or using any indicators. Then you can actually know the stocks, the precise, what are they going to be, okay? Whether it's going to go down or they are going to move up higher. If you don't see anything like this, then most of the time they'll try to move it up higher. All right. So this is just one of the way that we look into the market. There's a plenty more of way. Another way, we use it for intraday trade. So we exit this one and we entry like about 8:59, 57 second. Okay, 57 seconds. So it's before the market open. We already key in the orders, right? So the orders that we match is 40 cents, but we key in at 41.5. So this is how we go in and rush in to get the best price that we can get, okay, to get it at 40 cents. Because how this theoretical price is actually works is based on whoever comes in first will get the stocks, get the shares, or whoever beat the highest price will get the shares. So this is how this is one of the technique. You can actually watch our day trading to find out more about this. Then on 7 minutes later, we are able to take the profit, 1.5 ticks of profit over here, 400 plus about 500 ringgit here. So how do we know that we want to exit at 415, which is very close to the high side here? Is because if you look into day chart over here, our exit is basically on this, on the second candle of the day. So exit, then next thing the price keep on going down and down. So why we can do it so precisely? I think a lot of people in the market, they will think like, wow, okay, why you can do this? Is it correct or not? Is it true about this? So let me show you about this. This is one of the way that we time our exit using in the day trading. So we look, this is a slightly is a record of the previous trading days. So in real time, action time is going to move it very fast. So they have the time interval from here, 9 o'clock 4 minutes 13 seconds. So we can see all this different timing, different transaction actually comes in. This actually tell us the intention of the big boys as well. So what we see from here is that we find at 41.5 cents, they buy up, they take 41.5 cents and then clear it, and then you jump into at the buy queue here. So 41.5 is here, and then slowly, as long as they refill the buy queue, then it tells us that they still have the intention to move up higher. But the problem here is that they don't refill the buy queue, it continue to sell it down. But then after that, after they sell it down, the price 415 is taken at the buy side here again. So the one in the middle here is actually last done. Okay, last done, which means that it's transacted. Then you show in the middle here the last done volume here. This is the sell queue, this is the buy queue, or you can call it, this is the ask price, this is the bid price. Those that orders are there waiting. So we see that 415 is clear. All they buy up all the sell queue from here. So 415 is back to the buy side, and then you can start to see the queue, they refill. All right, they refill the 415, so which means that they should have the intention to move the price up higher, right? But what we find is that if the big boys, if they really have the intention to push the price up higher, they will clear the sell price within 1 second. Okay, I can show it to you. Like when they clear 415, this one was about 400 plus, so you might think like 400 plus is very little, so to clear it off within 1 second is actually very possible. But even though those stocks that are very expensive, huge queue, they can also do the same thing. Within 1 second, they clear off everything. So let me show it to you at 415, 410. This one they're buying up very slow. This one market open. Market open, price move up. Let me find it for you first, okay? Don't just stare at it, so you will get very dizzy. So usually, okay, 410 over here. Let's say 400 lots. They want to clear this 400 lots, they can do it within the same second. So you can see this is the 9 o'clock 3 minutes and 2 seconds. Up until here, 9 o'clock 3 minutes and 2 seconds. So they can clear this off within 1 second. So this is the usual thing that they always do. Same thing goes to here. If they want to clear, they can clear off even though there are 1,000 or 10 over 1,000 or 100 over 1,000 of orders of shares are queuing there, they can do that within 1 second. But in this case, what we see that they don't do it in this way. They do it slowly when they start to take 420, right? So 420, the time should be at somewhere here. So 420, when it comes to this point, so we can see when they buy up 420, 9 o'clock 6 minutes and 9 seconds buy one time, 22 seconds buy one time, 40 seconds buy one time. So it's separated a few rounds. So they are not clearing it very fast, even though with such a small buy orders from that. So this actually tells us that they did not have much of the intention to push the price up higher. So that's why you will see that we exit at the high side over here. So 420 is where they push the price up higher, and the highest point is 425. So that's why we are able to exit at 415. So 1.5 takes a profit within 7 minutes. So which is good. So from here, this is some of the transaction. Looking at the transaction itself, or you can call it like the tape reading. So last time, Jesse Livermore, when he do the tape reading, he need to be a reminder or dealer in the trading floor so that he can read the tape. But right now, it's a different thing. In the market right now, everything is online. You can read all this in your trading platform. So you don't, there's no secret to find out what is the intention of the big boys, whether they have the intention to move up higher or not. It's all in your trading platform. Just that whether you know how to extract this and analyze, interpret this or not. So don't look into the traditional technical analysis anymore, because you have used that before. I have used it before as well. So it doesn't help me to achieve this kind of profit. Like for example, on April time, everyone is still staying out away from the market, or that time we actually have some rebound, and then it's at the peak right now at that point, April. So we are able to make a lot of trades from there. So you can see most of the trades are short, a very small amount. The reason is because during that time, we still see the market is not very stable, so that we look into short-term trading instead of looking for any mid-term trades, because the market, the big boys, are more like attracting buyers from there, from what we see from the price and volume action from it. So that's why we change to short-term trading or maybe day trading. But looking at itself, we can actually on April, we can actually make about like 5,000 plus profit. And then on May is where the market starts to go down. So when it starts to go down, of course, at this point over here, there's still a lot of investors in the market. They're still afraid, not willing to step back into the market. But we are still able to make profit from it. And then on June time, we make the losses. So this June time, we make the losses is because we move back in around at the end of the June to test the market to see whether big boys are ready. So after testing a few rounds, we know that they are ready, but it's not at the right timing yet. But starting on July, we are coming back with a profit from here. So 4 months total profit is about 11,500 plus, not including those that we have done this the previous one. So include that about like 12,000 plus. So this is the result that you should make. Not just about the result over here. You might make lesser or you might make more profit from us by knowing how this big boys actually works. You know that when is the time to take profit first and then move back in later on. So you won't get trapped in the stocks and then you cut loss at the lower point. So that's one of the obstacle there's a lot of retail investor that they are doing is they facing is that they enter into a stock. What they can do is that either profit or cut loss. They can't decide whether to cut at the break even or maybe have a minimize of losses nearer to the entry price that they have, because they know that the price is going down lower, so they don't have to wait for the price to go down to the cut loss point. So they just need to actually exit at a higher point so they can minimize the losses from that and then maximize the profit, enter again. All right. So we can't do that is because technical analysis doesn't tell you when is the right time, when the price is going to have a retrace, when is the price is going to peak, when is the price going to rebound, because it doesn't look into the details price transaction that I share with you guys. So if you have been following us, looking into our live stream, looking into our Facebook or maybe Instagram, you know, we share about our story, how we enter into the market, looking at all this pricing transaction, you know that all this is true. Okay, so we can look into it. All this, we just put it out. All right, so we don't hide anything. We don't shout when it's the uptrend or any stock. We don't do the things like we tell you 10 stocks and then whichever move up and then we just shout about that. We don't do that. All right, so we just look into that. Okay, so the difference about us with other courses is that all this training over here, trading experience, we use it and then to build these strategies to come out, this analysis to come out. It's not something like plug and play where you plug some of the strategies or the indicators from other market and then you put it into Malaysia market. That doesn't work because different market have different regulation, different market size. So you can't use that. You can't put that into the different market. So we are using our experience, 10 years of trading experience to build this up. So it's easy. It's a simple way for you to learn this. Okay. Then this is based on the transaction analysis on the big boys. So it's not like indicators based on mean, on the average price. Then you assume that that is the support. So which is not, I really tell you, that is the big boys where they are selling on the way up. So how can that be a support, right? So the third one is that it works in every trend. It's not just in the uptrend and then you make profit and then downtrend, you don't know what is happening. Then the price is already gone down and then you make losses from there and they get trapped inside that. Because you works in every trend, you know that in every trend what kind of trading strategies that you do, you can look into it. Like for example, last week we know that there will be a price down in the market, so we look into the structure warrant, the put warrant, so we enter into that. So right now we're still opening to it, so we need to see like how much what is the result from it. Okay, so it works in every trend. If you know how these big boys it is, you know that oh, big boys getting out, they are attracting buyers aggressively, so they so we know that this is not the right time to enter, so market is going to turn back soon. Okay, so if you see that big boys are coming back, they are doing a lot of accumulation, then you can move in for mid-term or maybe for long-term investment into it. Okay, and then when this is how you know the market reversal as well. So why the traditional analysis, I'm not saying there's no use, but it's okay to actually use it for analysis, to analyze what is the current trend, the price right now, how is it like, sideways, uptrend, downtrend. Yes, it's good for technical analysis, but to know what is going to happen is not really helpful because I've used that before, and most of you use that before, you know that, right? And then it's always late to react to market changes because you wait for the MA to cross, to have a dead cross, the price really goes down lower. I don't need the indicators to tell me that the price is going down because the price has already gone down. So indicator cross, it means nothing, all right? So basically this is the difference between us. You can't find this anywhere, all right? So you can't find, of course, there are a lot of other courses out there, they do about technical analysis, which honestly, I can tell you can learn that from internet, all right? So our site over here, you can't find that in internet because based on our experience, I'm going to go through 8 months with you to look into the market, going step by step, teach you, share with you how the big boys work, and then at the same time coach you to tell you, okay, this one you are doing right, this one you are doing it wrong, so you need to change, identify what is the mistake that you did. So basically this is like more like a coaching program to you guys, so you don't have to worry. It's not going to be a huge sum of money for you to look into it, so it's just 689 per month. So you just go for do the subscribe for every month up to 7 months, and then there's a full course. The full course is actually 8 months. Every week I'll go through a tutorial with you guys. Okay, so this is basically what our training and our operator analysis is like. So I know that you guys have already seen the difference from me. I know that most of you will see the difference, but of course I know that there's too many of the courses out in the market. Last time I used to attach with one of the educational company as well. They teach TA, so I don't use it anymore. So I don't use any of them as well. Okay, so I know that this is the way, and we can move it. We can look into it. You don't have to look around and see which one is better and stuff like that, because I know that we have the best way to find what is the trading method in the market to achieve the very good return for ourselves in the market. But of course, different in different level, you will have different returns as well. That's why we need to spend 8 months with you looking into this. All right. So if you have any questions, feel free to send us a PM or comment, leave a comment in the comment section, or PM us in Facebook page so that we can reply for your on your questions or inquiry from it. So remember, this one, the intake is coming up this week and 6 and 7, Saturday and Sunday, and then every week we will have a tutorial from there. So you don't want to miss this. While the market is going for a retrace, you can actually go in when the rebound again. Okay, so let's move into the market together in this time and change yourself. Okay, change the way you look into the market. If you don't change this, the market will change it. All right, thank you very much. See you guys again next time. Bye bye.
Wrong and Search. True traders react to the market.